Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision every day. Friday morning, it's in Austin, Texas. We got a little bit of an ice storm going on. That has been no fun. We did not move for Texas for this, but that's what we're dealing with on the outside. On the inside, we have the futures in the red a little bit. We did have a little bit of an off day yesterday, expecting a little more bit in the red today, but not really all that concerned about a big move down. Our specific topic of the day today is what are the iconic brands out there to invest in if you were to just buy a couple shares and put them away forever? We're going to talk a little bit about, is buy and hold the strategy? Is that dead now? Is it hold on for dear life now, which kind of the Reddit gang brought out? No, that's very different from buy and hold. Buy and hold is very much a hunter-gatherer, put iconic brands into your portfolio and hold them for decades sort of thing. But then we're going to take a look at Disney. What are some other, they just crushed earnings. If Disney can survive a pandemic, what can't survive it, right? So what other iconic brands are out there? Is Apple, Amazon. We're going to talk about those today. What are some iconic brands of the past that aren't here anymore? So you can't just buy them and forget them. You do have to pay somewhat of attention to what you own, but for large part, you can put some safe names in your portfolio and make some money over time. So that's what we've got for today. For catching us on replay, thank you so much for checking us out. Make sure you subscribe, hit the notifications bell. And if you want to join us live, it's $25 a month to be able to come into the room. There's a chat window and a Q&A window for folks to pass information to me and for me to answer questions. And with that, let's go ahead and get our Friday started. Welcome back, everyone. Here is our lineup card for today. Make sure you have your call sign entered and your chat window and your Q&A window all set up for this morning. Standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence before acting upon anything you hear here in this morning. And full disclaimer information is available at ototnow.com. All right, February 12th, almost halfway through. Remember that Valentine's Day is coming up if that's not in your cross-check. Our mission objectives for today, we're going to grow our money, protect our money, and live off our money. Specifically talking about more a buy and hold mentality. We've had the big Reddit thing. We've had a lot of day trading stuff going on. Folks are pretty active in their portfolios right now. The comment out there is you may be doing fantastic, but there is a thought a philosophy out there that everybody's a genius in a bull market, which we've had. So really almost anything that you've bought and held in the past year has gone up, since the March 23rd lows has gone straight up, right? And some of those have gone up 100, 200%. So to think that you can sit there and replicate that, maybe you can. Generally, you have to, in order to replicate that, you have to sell these names that have gone up so much and get into new ones. And that's kind of that traders. The issue with trading is you always have to find new stuff. This is more taking it back to long-term investing, where you're looking for iconic brands. And what would I say an iconic brand is? I think Disney is the perfect example of that. I'm looking for a long-term holding that's best of breed in the space. I'm looking for a high margin, a highly addictive product, and a moat. And nobody can just throw up amusement parks overnight. Disney has an iconic name that the brand is worth something there as well. Nobody can just go in and compete with that overnight. So that's what we're going to talk about today. Excuse me, got allergies in the middle of an ice storm. Crazy. All right, question today: what is buy and hold investing? This is not HODL, which is hold on for dear life, which is, basic market manipulation, drive the price up sort of thing. We're talking buy and hold investing, of adding things to your portfolio over time. There are pure buy and hold people that never sell. I will tell you, if you are wealth building and you don't like going in and out of the market, this is wealth building 101. You simply add things to your portfolio. There are things that may go to zero over time, but most things do not. If you just bought Apple and you don't care what it's going on in the price range, or you're buying Luckin Coffee and you don't care that it just got cut in half in the past few days, or you're buying a marijuana investing theme and you don't care what's going on with the price on a daily basis, it's a pretty clean and what I would call emotionally sound investing strategy where you don't sweat what's going on with daily price action. You're wealth building, you simply add it over time. If you think of it as real estate, it's kind of like picking up a property every year. Guess what? After 20, 30 years, you're going to be rich. Same thing with a portfolio. You simply add stuff to it. You don't ever cut anything out. You know that most of it's going to grow over time. Some of it may go to zero, but oh well, that's the risk that you take. So different philosophy than a very active type get in, get out sort of holding. All right, our flow for day, long, short, open, short, long. We're going to take a look at the market reviews around the world. We're going to take a look at our headline reviews here in the U.S. Here's some of those iconic brands that I threw out this morning. You may disagree, and that's okay. I would say Disney and Apple are probably the safest. Amazon, probably. Home Depot, JP Morgan, you could argue. And I would say that many of you may say, especially the younger crowd in the room, may say, well, Bitcoin belongs way at the, earlier on that list. I'm not saying it doesn't. We'll see. But and again, I put the G in front of it because that's how we hold it. We'll get into short-term market execution. For those that just joined, let me hit this one more time. I'm not in love with any of these trades. Long BHC, short ACB, and Space. Space had some launch negativity. Those are down 8-9%. ACB, Aurora Cannabis, just all the pot stocks are selling off hard, especially after Kramer kind of called the entire industry out, which I don't really agree with him. But he called him out from a market cap perspective, saying the industry is just not big enough to justify these valuations. So while he's right, he did do some damage to the to the stocks. So he's right in a term of they are not that big, but then I would say not that big yet, right? If you think of marijuana is going to go the way alcohol, then obviously it has a lot more room to run. All right, contingencies, academic resources are standard. Let's take a look at where we've been. Here's the 1 year move in the SPY. Have a couple of flat to down days recently. Not really all that worried about because we've run up so much. When you zoom in on the 5 day of the SPY, I mean, this is what we're tracking all the way back to earlier in the week as to where we were. So really not that much of a sell-off. Little negativity going into the open, and not too much to really worry about, though. I think today could go either way. All right, going to the headlines for today. Let's take a look around the world. Everything in the red there for the U.S. is a little bit in the red. Let's see, Japan down, China up. China's been up pretty significantly lately. Europe mixed. Here's our numbers from yesterday. The Dow was down a little bit. I called it a negative day because the futures were up so much, but still did end up mostly in the green today, and a little bit of volatility thrown in there. Bonds creeping up. Oil's been stable, 55 to 60. Silver's been creeping up. There are some people calling for $50 silver because there's a shortage out there. I don't know if I buy that theme, but I wouldn't buy into it thinking silver's going to double in 2021 or anything. And then crypto. Bitcoin, basically, this is the smallest move I've seen in Bitcoin in some time, right? It's been moving 3 to 6% a day. It seems kind of chilled out. So guess what's going to happen this weekend? Elon Musk tweets, right? It's because what he does his best work at 3 a.m, evidently, because that's when he's most active on Twitter. But yeah, we'll see what he says this weekend. Kind of crazy. All right, there's the Austin jersey. I like talking about the Austin Football Club. First home stadium is not going to be done until June 1st, so all of their early season games are going to be away matches, which is kind of interesting. They'll come back to the stadium, which is again right here in the Domain area if you're interested. All right, as far as what else is going on, impeachment, sure, boy, this gets a lot of press. I don't know. Talk about not moving on, but we'll see what happens. How much would you have today if you invested $100 in Bitcoin in 2009? You do not want to know that number, because it will make you mad at yourself that you weren't in on it. That's kind of a fear of missing out headline, and you see this all the time in investing. You cannot go back in time. If you invent a time machine, you're already going to be rich because you just need to pick one stock to, you don't need them all. Just invest in Microsoft and call it good, right? But as far as the fear of missing out, there's always the woulda, coulda, shouldas. You cannot look at investing that way. You will drive yourself crazy. You have to simply say, I missed it, and move on. Okay, here's the negative headline for space this morning. Shares drop as company delays upcoming flight test. Entertainment will boom again. Again, that affects Disney. Disney posted, I thought for sure it'd be a higher, there we go. Disney smashes streaming subscriber expectations. So again, the stock is up based off of streaming. But if you think about the company as a whole, think about some losers out there. ESPN has been struggling. Disney owns ESPN, struggling due to lack of sports, staff cuts, all of that stuff. It's been basically a challenge for them. I think they should have spun off Disney years ago. Stock would scream higher. Excuse me, spun off ESPN years ago. I misspoke there. So Disney owns ESPN. If they spun off ESPN to its own company, the shares of Disney would be far more pure, and they could stand on subscription, stand on their retail brands that they have, and also stand alone on their content, movies, theme parks, that sort of thing. So Disney land in California has been pretty much closed, and Disney's still posting a profit. So kind of crazy. Let's take a look at Disney's stock here. Again, this is back in pandemic world, down around 100, basically doubled coming out of that. And are we off lockdown? Not really, right? We still can't do a lot of travel, can't do a lot of things. The vaccine rollout's been kind of slow, but yet here Disney has doubled. Kind of crazy, if you will. So if you think we're going to, as a society, release like rats out of a cage, once we're we hit June, July timeframe, names like Disney are going to go a lot higher. I do have to caution it does have a forward P of 40, so it is kind of overpriced to where it is traditionally. But when you think of money flowing in, I would rather own Disney than a cruise line or an airline. I mean, you got to be kidding me. All right. I want to show you one thing real quick about the Bumble IPO. So everybody's like, well, Bumble went up, 80% yesterday. Well, no, it didn't. I mean, that's if you had the pure IPO shares. But if you really look at it, it opened in the high 70s and it closed at 70. So basically, if you were not in on the IPO, if you were a secondary market player, you lost money yesterday. So even though the headline is everybody made money, and I got the, hey, did you mortgage your house to get into Bumble? I mean, no, I did not. And I didn't touch it actually because it was so overpriced that, it was, jumped from 40 or whatever, 43 where it opened all the way up to the top here and then basically sold off hard. I mean, it's hard to think it can even hold a $70 level. That's kind of crazy. So, all right, let's go ahead and set up for our day trading. We will take a look. I'm not in love with any of these. Actually, I want to put Bumble up there real quick to see what the action is pre-market. Not Mumble, Bumble. BMBL. Yeah, there we go. It's going up this morning. So we'll check back on it. All right, make sure I have this shared out correctly here. I do. All right, 30 seconds to the open. Give me a second to get set up. Good morning, everyone, and welcome to the On Time, On Target play of the day. You have 4 screens in front of you on the TD Ameritrade Think Pipes platform. We have BH. We have all the way to the left as the SPY on a 1-minute chart. Again, the futures are a little bit in the red, trending down. We have one long for today, BHC, going higher, gapping up. I can't remember the exact news. And then we're looking at 2 shorts, ACB, which is our opening bell. ACB short, which is a cannabis name. Again, those are selling off pretty hard based off of Kramer's comments and the recent run up. And then we also have space, which delayed some launches. So I'm really looking at space here first. Kind of wish that move hadn't gone down. I'd prefer this to back up a little bit and then sell off. $53 price point. So you're looking at a 50-cent stop, maybe 60 cents. We shall see. Plenty of volume moving in here. Do want to back out and take a look at a longer range chart, see where it is. You can see there's more room to fall here. So we're okay for taking it really anywhere in this space. All right, got with the high of the day, 53.40. So you'd want to take it around 52.80 to the downside. So 52.80 will be our entry point. We will use a 60-cent stop. Well, there goes ACB falling off a cliff. Missed that entry there. Again, waiting for 52.80. We're going to use a 50-cent stop on space. Okay, about to get to our entry point again, waiting for 52.80 with a 53.30 as the upper stop. Again, if it doesn't hit it, then it just doesn't trigger. All right, looking over at BHC. BHC not going higher too much here. We'll look at some other names here in a second. Again, waiting for space to trigger here, which is Virgin Galactic off of the headline of negative. Tempted to take it here at 52.90. Let's take it here at 52.90. We're going short. I am going to take it here because I think it's going to have that big move down. We're going to use a 50-cent stop. So that gives us all the way up to 53.40, which does cover the high of the day. And again, we're going down. So we'll draw our arrow here as far as which way we're taking it. There goes ACB down again. So we're in the trade at 52.90, 50-cent stop. Our first R point is going to be 52.40. And then 51.90, I'll draw it down here, is our second R. So that's how we were set up for Virgin Galactic, which again is ticker SPCE. So we've got that going. All right, ACB is selling off hard. So you did have an opportunity to take that in here. It's almost at the 3R point already. So let's take a look at some other names, marijuana related. CGC is another Canopy Growth name out there. Let's look at Tilray, probably the number one known name out there. It's actually acting opposite of Aurora Cannabis, only down 4%. Let's look at MJ. MJ down 4%, again off of a huge move down yesterday. Toke is another much smaller, more thinly traded ETF for marijuana. All right, let's check out Luckin. Luckin has been a house of pain. It's been trending down. Do not want to short into this, but down another 14%. Really, this, I mean, you look at this chart, it's kind of eye-watering, meaning tears. Up here at 13, gets hit with the, they're filing bankruptcy. It's actually a Chapter 15 restructure. Is this a screaming buy yet? No, I have bought more in here. Obviously, that was premature. If it gets down below $5, I think it's time to start buying it hand over fist again. There's a lot of folks who will be bailing out of it if it gets down below $5. So keeping an eye on Luckin. Again, it's easier to keep an eye on things when you have a $2 entry point. For folks that got into this late, obviously they're going to curse the name Luckin and hate it and all those things. So, all right. Back to our iconic brand. I'm going to put Disney in there, see how Disney's doing. So here's a 10-day chart running up from 160 to 190. So pretty good move higher in Disney. Looks like the futures have, or the market after 5 minutes in, trending up. So maybe we'll find some green in the overall market today. All right, back to our trade. We are up an R. Again, I'm not in love with this. If there was a day to kill a trade, I'm not saying you need to kill this trade here. I'm just going to leave it open because we take this for the math, so let the math work. I would be naive to say that on Mondays and Fridays, if there were days to kill trades early and take profits prior to the 3R point, it'd be on Monday and Friday because of there's less things going on, and you book your profit and go about your normal day job or your school job or whatever that is and call it good. So looks like this is this is a short cover. So boom, we're back out. So right as I was talking about the, getting out of a trade early, you see it reverse on you like that. So remember, as soon as it hits that stop, you got to be out because look at this short cover. that's going on. This is crazy. It's almost like a Reddit fueled short squeeze. So I'd be interested if anybody's on Reddit right now, take a look real quick on Wall Street Bets and see if they're talking about space, because that was quite the squeeze there. When you look at it, this is a $2 plus move, $3 move. That's quite huge. So kids, for those that don't like to use stops, this is exactly why you use the stop. So when something starts screaming higher, I mean, just think, this is maybe a weird reference, but if you went to the bathroom and came back, or went to eat your morning coffee or whatever and came back, and you're like, boom, look at this. Not only would you lose the 1R, but I mean, that's like a 4 or 5 hour trade. So if you're planning on getting up in the morning and risking $200, you could have $1,000 loss by the time you look back a few seconds later. So anyhow, a warning to those folks who think you can look away or not use stops. You should always have your stops in. Okay, let's take a look at our charts real quick, see what's going on. Clickstream in play lately. I think that should take them above 7 cents a share. There you go, right at 7. So penny stock, not something I'm really recommending for you, but it certainly is in play. Penny stocks, if you're going to do anything along the penny stock game, you need to just be prepared to lose it all. So if you're mentally prepared for that, then anything you get, you can obviously get big gains, because it moves, 1 penny is over, 10% at this point. All right, PayPal, DraftKings higher. Again, Kramer kind of poo-pooed the marijuana space, but he said DraftKings is huge. And he also runs a show with DraftKings. So looking back a few days, up at 65, down at 60. DraftKings a buy here. DraftKings, I think, will be one of those iconic brands. So if you buy it, just buy it and hold it. I have covered calls on it up at 70, so I don't think it's going to top 70 anytime soon. All right, so not a lot of names up big. And again, that's a Friday kind of thing. Let's see what we have. Luckin setting the loss leader for the day. House of Pain. Hillian is the old shell, if you will, the electric vehicle space. There's MJ down 6%. Notice I don't have the individual names, ACB, CGC, any of those names. I just have the MJ, if you will. All right, nothing super notable jumping off of the page here. PayPal's up. Wonder what the excuse me, just taking a look at PayPal real quick. Seems to be back in play, up $30 on the week, a few today. So I have to look and see if there's any headlines. If you're going to own some long-term payment processor, PayPal and Square is the way to go. Not necessarily Visa or MasterCard. Did want to look at Bumble real quick, see how the price action is today. So again, priced at 43, it opens at, so for those that had market orders in at the open, we do this for the direct listings. We'll do this for Coinbase. We're going to do this for Roblox, which, by the way, Roblox got delayed until March. So again, it's going to be a few weeks yet. So I will put a basically question out to everybody to see who wants Roblox and make a mass buy at the open. But like we marketed into, we didn't market into, we did a limit order into Palantir. If you remember, I said I'd be willing to pay double on the first day for Palantir, and didn't really need to, but we opened it up and we got that $10 price, that initial the initial direct listing price. A little different here. So if you'd have said, that yesterday, if you'd have put a market order in for shares of Bumble, at 43, you would have gotten filled at 76, or here's where it opened, 75.48. That was the first trade. So 75.48, boom, there's your shares. And your app says that you're up, 80%, but you're not really, because you just bought those, right? So it doesn't do the math until the next day to tell you, kind of where you're at. So you're really, as soon as you buy these, it goes up in the green for the first minute. And then after the first minute, it was a money loser the rest of the day. So remember, if you're in on the IPO, meaning you have the pre-IPO shares, you're going to be locked out for 3 to 6 months. So you don't really care. But as far as the float, everybody who bought it yesterday is pretty much down money. Sideways and after hours, and the same thing. We open here at 75.75. I'd imagine it would trend down today as people are less than enthused about the valuation. It's simply quite incredible valuation for a dating app. All right, let's go back to excuse me, voice giving out this morning. Let's go back to talk buy and hold, and I'll close with that. You guys are pretty quiet this morning. So buy and hold definition, you probably don't need what the buy and hold is. It says it's passive. Well, it's only passive in the fact that you're not selling. But there's really, there's all kinds of chat rooms and things out there about buy and hold investing. And I do like the idea of buy and hold from a perspective of don't outthink yourself, right? If you buy Apple because of the iCar in 2024, well, guess what? You can't sell before 2024. I don't care if the stock triples or gets cut in a third. If you bought it for the reason that for the out years you think there's going to be iCars everywhere, then you got to hold on. So it does help depending on if you're the type of person that likes to get in and out of stocks all the time. Well, you're never going to capture a 10-year gain if you don't ever hold a stock for 10 years, right? So it does help some folks with that to not shoot themselves in the foot or drive themselves crazy by every time something dips, you sell out of it and then it screams higher, right? So you simply acquire things, think of putting it into a basket. Now, I'm not big on big dividend names. I think anything that pays over about 3% generally, their money could be used towards growth. That's an opinion. However, if you have stocks that have these dividends and you currently reinvest them, so think from a buy and hold investor, if something has a 5% dividend, like AT&T, I think that's a terrible long-term investment. But if you were to buy it, the attractiveness of it is you buy 100 shares and then you get 5% a year. So really, if you hold it for 20 years, you already know you're getting your money back. So everything is house money. And that at that point, the shares are free. Well, if you do that and do that in a bunch of big dividend names, even if one of them does go under, you're still going to be a multimillionaire if you start in your 20s and buy crappy companies. Honestly, that's just the way it works. You are acquiring things, and through that acquisition, you're going to build wealth. I think there's a faster, better way to manage growth names to get there, like we've seen, lately in some of the returns you've had. But if you're a buy and hold investor of big dividend names in 2020, you may have actually lost money because you're going to have energy in there. You're going to have, BP. You're going to have Exxon. You're going to have utility companies. Things that generally don't go screaming higher like ever. But you do have that reinvested dividend working for you. So you're kind of putting math on your side, and it is a very good investment strategy for those that could get caught up in the day-to-day emotions of the market. So consider, some people have their buy and hold portion of their portfolio. If you have $100,000, that portfolio is kind of too small to have a sectioned account, or a sectioned area for that. But if you have $1 million portfolio, you could certainly have $250K towards that. This is my buy and hold. This is my boring type investment space. Maybe some long bonds, maybe some energy companies, dividend payer. You can have a portion dedicated to that while you have the rest of your portfolio looking to not only perform with the market, but outperform as well. So now, enough philosophy on buy and hold investing. With that, had a great week with everybody. So thanks so much for stopping by. We will catch you guys on Monday. If you're here in the Austin area, enjoy the cold weather. Yeah, single digits going into next month.